Faith Warriors. Let's have a great week. How's everyone doing? There you go, Shubham. Here's the audio. We start at the top of the hour every day. Forever and ever and ever. All right. Q&A, yeah, same thing. All right, so I thought I'd start off initially with a little bit of a shorter term view on the precious metals, starting with gold. And it's still my contention that these highs are not going to stand. Are we going to get one more pullback? Is this a distribution top and it's just, distributing to all the bulls right now and we're going to negate the breakout? That's possible, but we could also get one more surge above these highs. It could take you as high as 1480 just arithmetically with this $50 range, about almost 60. So people probably call above this high with a trend line. A breakout can get you to 1485 or so if that happens. Hello, Hamid. Okay, how to draw long-term trend lines. Okay. I think you're looking for education. We're doing analysis here right now, Shubham. So we'll be talking about markets. So I thought with all the enthusiasm in gold that maybe I get out my telescope, okay, and take some real macro views. I'm not trying to steal thunder from Stelios, but really when you look at the monthly chart right here, this is really just a 50% pullback, 50% retracement in gold, as excited as everyone is about this breakout. When you look at it in the context of this decline of $800 or so, we're playing around with the 50% retrace. 1488 would be 61.8 back. There must be some extension up there as well. I have quite a few fibs here. Anyway, I'm not saying go out and short the gold right now. I just want to temper some of the long-term enthusiasm. Oh, thank you, Georg. Yeah, so we do have a nice education section on our website, Shubham. Okay. What about the possibility that this is just a B wave? And all of this is long-term basing, which has everyone excited, and you can't negate it until we start closing back under the breakout, which people have at different levels. I have it at about 1380 to 75. So we'll see. But my contention is if the dollar has one more run in it, and I still think it does, even though I think we could trade see a 95 handle again, but we have to hold a 95 handle. If we don't, then yeah, gold's on its way. But I'm still giving the dollar the benefit of the doubt and wanted to just show this monthly that there could be a pretty good short setting up. And even if you're not like a deflationist looking for under 1,000, which, I'd say the bears would be licking their chops if they're looking for sub 1,000 gold sometime next year or whenever, that this is the best shorting opportunity in, let's see, 3 years. No, 6. Back to 2013, where, that's all we've gotten back to is the levels in 2013. That was a long time ago. It was so long ago that ForexAnalytix was just an idea being birthed in Blake Morrow's imagination. So I just wanted to show you the monthly on that, and I want to show you the monthly on S&Ps as well. The divergence is so glaring, and we also have it on the weekly, glaring divergence. So I think there's some type of top. You never know how far the rubber band's going to stretch, but starting to look at things, we're getting a little bit of a throwover, a megaphone formation. John Murphy, who a lot of people follow, says megaphones are the most difficult formation to trade. That's what we have. A broadening top is another definition. But when I look at this, I go, that's a pretty glaring divergence, new all-time highs with this reading way under 70. So we've had 1, 2, and this is the third drive up here, and we'll see how far the rubber band stretches. I know it sounds like I'm a lunatic, but there is a partial lunar eclipse. I've had guests on with GAN dates sometime this week. So middle of the year, middle of the month of the middle of the year, we'll see what happens. I think there could be inflection points in both S&Ps and gold in almost every asset class. And you know why? Because every asset class has had no competition for a long time. So let me put it out there to you guys. What would be competition for stocks, which is TINA? There is no alternative. And gold lately, and anything else and everything else that's going up. What would provide competition for that? How about like not free money? Not free money. So the last chart I want to show is the monthly in the 10-year before I pass it over to Blake. And, just some food for thought. I know it's not real actionable, the stuff I'm talking about, but, I think you have to start formulating ideas, because I remember years ago when gold was trading 1050 and a lot of the bulls were talking about a bear market rally. Okay, Joe. I forgot what I was going to say now. Okay. All right. Anyway, this could be the competition. All right. I know the month isn't over, but we're getting, and I know a lot of guys that are talking about 170 on the 10-year, and there are bomb bulls that, even are looking for new lows. But how about an interruption of that scenario? And if rates start going up, and let's just say this is a falling wedge, I mean, I can't argue with the formation, right? And we had a throw over or under, and we're back inside the wedge. And let's just say the wedge is real, and eventually we get a breakout over 226 or so. There's a lot of resistance at 35. If this is a falling wedge, what's the definition of a falling wedge? How much of a retrace can we get? Can you say 100%? Which, it was only a year ago, we were 3.25 and the whole world was freaking out. And you may say, well, it's only a point, to go up to 3% from here. But, a point from here is a 50% increase in interest costs for people. Okay. Yeah, Ben, you're right. 100%. That's right, Gavin. So a 50% increase in interest rates in a managed, delicately balanced, centrally planned markets and economy could upset things, especially since the narrative now is the Fed easing. So I think this is what could provide competition to stocks, competition to precious metals, because right now we do record all of these. And, right now there is none. And that's why a lot of these IPOs are very successful. I mean, they're just, people have to really speculate for returns now. NASDAQ's acting better than the S&P, more spec stocks in there. But rates are the key. I mean, what got us here all these years? What got us here? And what's going to happen to the dollar if yields go up? Maybe one more run, right? So anyway, I think this is the key to everything, the cost of money. And as you can see, there's been no competition for years. Okay, that's a daily. But when you look at it, it's been a long time. Normal, maybe reversion to the mean would be 4% long bond. We'll see how the U.S. government can function with that interest rate cost, but let alone all the financial engineering and inequities. And then you have opportunity costs in gold. You know, if you could get 3%, it's going to look great on a long bond now. And they used to have these things, this group called bond vigilantes. And we'll see if the bond vigilantes can rise from the ashes and keep the Fed in line when the Fed is easing short-term interest rates. They're going to say, well, I want to get paid more to hold long-term paper. Okay. Thank you. So those are my looks. Just a quick update on EG. I know a lot of people are loaded up with this. Pretty important area that we're at. Had a nice break, right? We've retraced 61.8 here. So if we could get a failure from 61.8, actually puts them out here after covering some on Friday. And I thought I was just, you know, covering early Friday. I called it a sacrifice to the FX gods, take something off the table so, you know, the market could continue to slide. But if this trade does work out, and we did have a 3-drive formation in the pound, just want to show it, even though the pound is weak today. If you look at the daily, this looks like a 3-drive to me. Is it going to search for one more? I really don't think so, because I think the dollar, and this is also going to be the key, dollar is hanging on by, you know, a thread here, and there's a gap at 620, and I think we could get one more break to maybe flush out the dollar bulls one more time, and then maybe yields start kicking in and we get the big move. If the dollar is really bad, there's my bull bear line in the sand, 95. Okay. And most importantly, and we have people asking questions about education and so forth. If you really want to learn to be a trader, surround yourself in a community of experienced, talented people. And we have that here at ForexAnalytix. So if that's you, here's your homework assignment. Sign up today for $1. And it'll give you 10 days to see if what I'm saying is BS or real. So you risk $1 to find out if I'm BSing you. Okay, I'm not. Try and find a crew like this anywhere on the net. I challenge you. Okay, and also pay a visit to our sponsor face, Forest Park FX. And if you're overseas, your trading could pay for part of all of your subscriptions. And if you're in the US, get a rebate check. And it's okay to have more than one account. And that's a wrap. So Blake, how are you? I know you like to get out of here before 5:30, and I just noticed Steve Skype that I think he said Dale has diarrhea mouth today.
What?
He said, I have diarrhea.
I said, as it seems, we are not needed today, which is good. I'm a little bit under the weather.
Oh, okay. Okay. Anyway,
no, Dale, keep on going, man. I fell asleep at the wheel. It's good.
So you could call me any night when you have insomnia, and I'll talk about the markets. And
for crying out loud! No, thank you.
All right.
No, thank you.
All right.
Okay. Just
I
kidding.
know.
So, good morning, guys. Yeah, I mean, it's been a quiet. It's a quiet night in the FX market. It really is. Euro came under some pressure just a few minutes ago as, the guys in the office were citing an 8 a.m. fix, just like it, quick sell off in the Euro. But the Euro, I mean, it's not going anywhere. I picked it up at actually 63. When it dipped to 63, I'll probably spin out of it here in the 70s, just kind of, picking up nickels where I can pick them up. I still like, selling the dollar on these rallies, like the rally that we just got. It's like I'll pick up the Euro any day of the week, especially when you got you were talking about gold, and I'll tell you what, Coach, silver has its bull flag pattern playing out right now. So what happens, Coach, before you take off to the restroom or wherever you're going to go? What happens when gold or silver outpaces gold?
It's usually a bullish sign for the whole complex.
For the whole precious metals complex.
Yes.
So right, you got silver that's actually up today, gold that's not. Gold is just still in this big consolidation. If you've listened to the week ahead video, I'm arguing that consolidation out of a 6-year breakout is a big deal, which it is a big deal in my opinion. I'm just waiting for a break above the 14, let's just call it 14 and a quarter, about 10 points from where we're at right now. And if that starts to break out, then I know that a few things happen. Silver's going back to 16.
I agree.
Yeah, silver goes back to 16, gold's going to 1500, 1480, 1500, something like that.
Agree.
And that puts the euro dollar probably back at the 200-day moving average, if not higher, maybe channel resistance at 114 and change. So I am gladly selling dollar rallies while precious metals is doing what they're doing. So I have no problem doing that. So when the euro dipped like that for me, down to the 60s, I picked it up right here on this dip, and I'm like, oh yeah, you want to do a little false breakout to the downside, which it did, and now it's it's kind of rallying back. Now I'm not super excited about the euro. The euro, as I explained in the week ahead video, it's not, I don't look at the euro and go, oh, the euro is going to 120. It may go to 120. I mean, there's got to be, you got to give me some sort of evidence that it is, some sort of macro fundamental reasoning why the euro should be going to 120. I don't see it right now. I'm not saying that it won't appear. It's just, right at this moment, it's not like my base case scenario for the euro. I think the euro could easily trade back up to 115, but getting to 120, something dramatic is going to have to happen, whether it's U.S. related or whether it's European Union.
I'm starting to hear some chatter. We talked about this a few weeks ago. One thing that hasn't been tried for decades is direct currency intervention. Our president could give Mnuchin do it.
Yeah, so there was some talk last week that that Trump's actually calling around, figuring out how he can weaken the U.S. dollar. So I don't know what that means, and I don't know how real that those reports are. But I've read that actually on multiple occasions. I've had people.
Never works long term unless you have coordination with other nations.
So and I heard
it's hard to coordinate with people you've
pissed off.
Yeah.
Right.
Got it. Yeah.
You have a divisive relationship with. Yeah. But I heard it from several sources. When for those of you that don't know, I use a Bloomberg system, and our office, our the broker or the fund that I trade through rather, has subscriptions to a couple of premier services that they're basically not squawk services. They give us direct access from just kind of breaking down, like few market professionals run these specific. They're not chat rooms per se. They're direct analysis and break down information immediately as it comes out type of services that we subscribe directly to them from our Bloomberg terminal. And I had several last week, talking about that. So I know it wasn't just a one-off. Somebody heard something. It was multiple sources had cited that. So I don't know if a intervention is so much in the cards, but definitely, Trump is trying to figure out how to weaken the dollar. And again, you can see it through the precious metals. The precious metals are looking towards a weaker dollar, and that's specifically.
You know how if he really wanted to do it, all he had to do is hand over the presidency to Bernie Sanders. That ought to do it.
That would definitely weaken the dollar, I think. Start looking
Steve,
at.
you like that solution?
I think that Trump should be careful what he wishes for, because at some point he might get too much of what he's asking for.
Yeah,
it's quite that I think it could be a possibility as well. But let's take a look at a couple of things, and I want to cite the Aussie. The Aussie has broken, and it's quietly doing it. We're breaking this big downtrend line today, like right now. Wow. I mean, this is a multi-year trend line, guys. It's not like, oh, hey, look, it's whenever I look at trend lines, I always look at the how long they've been around. It's kind of like I look at humans. Dale is older than a dinosaur. Therefore, I tend to give him more respect than somebody like Steve, who is like he just turned. I think he just turned 19. So when you're talking about the age of trend lines.
I look at the more immature trend line than me.
The longer they've been around, the more respect I'm going to give them, and that's true for trend lines and human beings.
All my trend lines, I'm going to make them gray from now on.
You've been making trend lines since like you had to draw them by hand on your charts.
Flint, I used flint to do it in a rock.
So he etched his trend lines in blood on stone on anyway. So the fact of the matter is the Aussie's trying to break higher, and if we break 70.50, that puts the 200-day moving average right in a view. But this movement that you're seeing in these commodity currencies should be a little bit of a warning if you're playing the dollar on the long side, that we got. And we have a bullish equity market too. You got the S&P that is not giving up. Now I know, Dale, you're a bit of a lunatic right now. Sorry. And I see where we're at on the S&P, and I see where we're at. But the fact of the matter is, it's bullish, and as long as we stay above the 69.60, I mean, it looks like we're going higher. So with higher equity markets, typically will come a weaker dollar as well. So anyway, those just a few things that I'm looking at. But look at that Aussie. It is not the Kiwi, but the Kiwi's up pretty significant today as well. Actually, the Kiwi's up better than the Aussie. The Kiwi's breaking out through this resistance well above the 200-day moving average. The Kiwi looks like it wants to rip up towards 69 cents. You got these commodity currencies that are extremely strong. Even the dollar Canadian is weak. I mean, it is weaker. And if you guys have not seen this is a trade that I've been in since last week. This is the New Zealand Canadian. Love this trade right now. It's obviously doing really well today, but I have a pretty sizable position in the New Zealand Canadian as we broke out of this, or we're developing this descending trend line. I even tweeted about it, but all the guys and gals in the chat room know I'm long this one. And, we get above 88 cents here in the New Zealand Canadian, and this thing could trade right up to 90, 91, 92 cents, which would be
it's also impressive that those commodity currencies keep overperforming despite the GDP number we got from China.
Yeah, it's not just the GDP number, which was little off. It's really in the face of knowing that there's China, U.S. I mean, I don't have any. There's reason to believe that something's going to get done, but obviously, the trade war is front and center, and it is. You have a divisive president who's, we're not, you can't be 100% sure that something's going to get done, but the commodity currencies like the Aussie and the Kiwi are still outperforming.
The conspiracy theorist in me tells me that Trump is going to postpone giving a solution to the trade war for as long as possible, as long as the market, and by market I mean the stock markets, because this is how he has chosen to evaluate his performance. So that's his choice, not mine. So as long as the stock market permits him, I think that he's going to postpone it for as long as possible to bring it near to the election period, if possible.
And wouldn't that also force the Fed's hand, that uncertainty hanging out there longer to get more
most probably, yes.
Okay. Yeah, so I think it would be pretty Machiavellian.
Yeah, so I think he keeps it as, an ace in the sleeve. If things go bad, he's gonna give a solution. If things don't go bad, he's gonna unleash some kind of a deal very close to the election period, and he's gonna promote it in his agenda as a major victory, regardless of how important or not it is. Because we saw the same thing happening with the UMCA or whatever the hell they renamed NAFTA to. Because in essence, the changes were minimal, but still he claimed that was like the best deal ever. So I'm pretty sure he's going to do the same with China.
Yeah, well, yeah, and we'll see it. I'm sure that and I know there's definitely a method to his madness right now, and that could very easily be it with China, but we'll see. But I am going to pass it back over to you guys, and I want to wish everybody a great week. Before I do so, I wanted to point out these cryptocurrencies. Bitcoin did slip to 10,000. This is a big breakout point, and you can see we dropped to 10K. We're holding it now, but Ethereum, broke this uptrend line. And soon as we snap these uptrend lines in Ethereum and Bitcoin. For ForexAnalytix, if you guys are crypto traders, the basic technical analysis, went red, on like Ethereum, we knew it was going to come off, and they've come off pretty aggressively. So it's going to be interesting to see, if they can garner some sort of support. 200 on Ethereum, 10K on Bitcoin. We'll see if that'll hold. But anyway, Steve, I hope you feel better today. Thanks for being here, and I'm going to pass it over to you guys.
Thank you, mate. Have a nice day.
Thanks. Hey, Steve. Hey, Dale. How are you guys doing?
Good, mate. How have you been?
Very good, very good. It's been raining here, which is not great, but
yeah,
it's okay.
This humidity is killing me.
Okay.
Honestly,
it's okay. So I'm surprised nobody spoke about the tennis. Come on, that Wimbledon final was.
Oh yeah. That was unbelievable. I mean, Federer really defies age.
Yeah. It's not. I was in the 2008 final, Federer and Nadal. I was in the grandstands, and it was amazing. It's not quite the same, but really was an awesome match. But anyway, yes. So what is happening? You talked about China. Actually, it's interesting because the year-on-year GDP number is the lowest. Well, it's been grinding lower for the past decade, from over 9%, and it's now just over 6% year-on-year, and it's kind of a very gradual fashion lower. But if you look at the other,
I wouldn't bet a lot that it's actually at 6.2. But
we've talked about this many times. Yeah. The interesting thing is that we had some more data, pretty important data. We had industrial production, retail sales, and they were big beats. And it's funny, every time I look at Chinese data, I realize how different things are to, say, the Eurozone or the US. You have retail sales 9.8% year on year.
Yeah.
Industrial production 6.3%. These are just huge numbers. But I'm guessing that the market, you know, the GDP print was, although quarter on quarter it beat, the year-on-year number was the lowest.
Speaking of which, we just got US New York Fed manufacturing quite a lot stronger, 4.3 versus 2 forecasted, but I don't expect that, you know, it's going to create any real volatility, to be honest.
Yeah.
That's why I didn't interrupt you.
No, that's fine. That's fine. Yes, thank you. I forgot about that. But I was going to say, maybe, you know, the market, they're looking at the GDP number, which is the lowest in quite a few years, although it's kind of trending slowly lower now. And but they look at the other numbers, which outperformed. So maybe that's why commodity currencies and, you know, like you mentioned, are not falling, or at least not now. We also had Swiss PPI, big miss on that. Minus a half month on month.
Yeah, minus 0.5%. Yeah.
Yeah, it's not a huge, you know, it's not a terribly important number, but really it's an indicator that.
I think that Switzerland doesn't really care about numbers, traditional numbers that the rest of the countries care about. They don't. I had actually heard an interview where they were explaining that the S&P was, you know, in private conversations admitting that, you know, they don't target growth, they don't target you know, other traditional numbers so much, because they know that they already have a wealthy country, a wealthy population. So their main focus is maintaining that wealth and not, you know, really striving for, you know, growth. And based on that, you know, disinflationary forces are not a problem, right?
Yeah, yeah.
Because,
I mean, if you think about it, put yourself in this situation. They're borrowing at negative yields.
Yeah, exactly.
They convert. They go into the FX market all the time. They sell the Swiss franc. They buy dollars. They buy euros, primarily euros, I think. And then they go in and they buy Amazon and Apple and you know, equities. And the S&P is a huge equity holder. So imagine if you could borrow at negative rates and then convert your currency and buy real. Stocks and real assets.
And besides and above all that, they already have a population that has an average income that is, you know, one of the best in the world. They
very well organized. My brother used to live there for 3 years, and he says everything just works perfectly.
Yeah,
and
yeah.
You know, you remember
as you know, one of my best friends is a psychiatrist. You know, he's telling me that, you know, the social care and they offer is beyond ridiculous. I mean, literally beyond ridiculous. Sometimes it's just, you know, annoyingly stupid. I mean, they provide, for example, drugs to all drug addicts without any obligation to, you know, to go off them or whatever. So yeah, they really, as a society, they really solve the vast majority of their problems. So they're not really in an urge to, you know, they just want to maintain what they have. That's it. As simple as that.
Yes.
What country is that?
Switzerland.
Oh, okay. All right.
Switzerland.
And Stella, I may have missed it. What's behind the weakness in cable today?
Oh, nothing that I can see.
Yeah, I haven't seen something in the wires myself.
Okay, thank you, guys.
Just, you know what it's like. The more days pass and nothing happens.
Yeah, if you want a technical explanation, I can tell you very simply. You know, we retested support, previous support as resistance. As simple as that. We obviously are still trading within this descending wedge question mark. I'm saying question mark because, you know, it can end up being a descending wedge. If we actually end up breaking above it, it is just a possible interpretation until then. Because if you don't want to take that interpretation, you can definitely get the other type of interpretation, which is that we remain in a very well-defined downtrend, right? I mean, there is no question about it. The downtrend in the cable, I mean, it's worth for people that, you know, forget to look at the big picture on occasion. If we go to a monthly chart, this is what the cable looks like.
Yeah. It's going to make new levels, isn't it?
I mean, we had a high in November 2007, and since then, we've only had two types of trading. One, impulsive moves lower, and then periods of consolidation, and then lower consolidation, lower, etc. So, you know, we remain in a 12-year downtrend. So, you know, somebody should always keep that in mind. Of course, nobody trades off a monthly chart. I'm not suggesting that somebody should, but it's a good thing to always keep the big picture in mind, right?
Rip Van Winkle does. You know who he is? Famous trader.
Yes.
Okay.
Speaking of which, by the way, yeah, right. Speaking of which, Stelio, do we have anything else? Because I really wanted. I know that Blake covered the Aussie, but I want to go over the Aussie because I see here multiple areas of resistance, even more than Blake had on his chart, which makes it even more important to see what the Aussie is going to do from here. As you see, I had this as a triangle. We're retesting these broken triangles, support as resistance. Also, this area here is the 38.2% fib of the November high to the recent low we had in January, as well as a horizontal support resistance area. Add to that what Blake was showing on his chart. He's looking like at a bigger formation. And add to that, I know it doesn't look that pretty, but it definitely fits the criteria. Why isn't this an inverted head and shoulders formation? What do you think, Coach?
Yeah.
Huh?
Yeah, looks good.
Yeah.
I wanted, it's a relative strength leader. Always belong to strength.
Yeah. So, any way you slice it, we are currently testing like major resistance area. And
maybe it comes out when gold finally gets through that triangle Blake showed.
And that's what I want to say. If you add to that,
that's what propels.
Yeah, if you add to that, and Greg mentioned it on Friday that he joined us, if you add to that the fact that silver is breaking out from a bull flag, Blake showed that. I have nothing different to show here because I have exactly the same thing drawn on my chart. Here it is. Here it is. So silver breaking out.
His flag was American. Same flags are flags, but the titles change.
Yeah, so silver breaking. Silver breaking out of this flag, gold consolidating in what clearly looks like a triangle. So the interpretation here is that there is a very high probability scenario that we're going to at least see one more push higher. So combine all that, and what you get is a very high probability that Aussie and Kiwi are actually going to continue up here. Aussie and Kiwi, here is Aussie, as we already mentioned it, and Kiwi already breaking out from this confluence of resistances, triple confluence of resistances here as well, 200 daily moving average, 50% fib, horizontal support resistance area. So I think that both of them show, very good promise that, if we clear those levels, they should extend higher. Now, the reason I'm starting from there is because, as you remember, we had mentioned that it's not weird, quite the opposite. It is to be expected that the rebound we had in Euro Aussie, in Euro Kiwi, we drew those on the chart several days ago. On Pound Aussie was one of the weakest, actually, just created a little flag here. And Pound Kiwi have failed. So, those crosses against Aussie and Kiwi look like, they will or they can remain for a period of time under pressure. So Aussie and Kiwi can continue to overperform those. Now, usually, although lately quite a few things have changed having to do with correlations with risk assets and stocks, usually, traditionally, commodity currencies overperformance was going hand in hand with stock overperformance, and definitely, we have some bullish, formations on the charts, and I've been warning here that things should be moving higher. I have one little objection here, not necessarily an objection, but I see a possible ascending wedge both here for the S&P and for the Nasdaq. So that doesn't mean that that's the case, right? I mean, they they might look like ascending wedges at the moment, but we might see an acceleration higher, in which case that's that's not the formation that we had in hand. It just looked like one for the time being. But I'm just saying here that on the chart from a technical perspective, it looks like a possibility that the S&P, the Nasdaq, and obviously if they do so, it's not that the Dow Jones is going to do something different. Obviously, IWM, the Russell, is anyhow underperforming. You can see clearly, for example, that the Russell has been consolidating quite far away from the all-time highs, which were registered in September 2018. Okay, but the rest of the indices more or less show the same thing. The Nasdaq has broken to new highs as well. The S&P has done the same. The Dow Jones one and the same. We actually had a wedge here that broke to the upside, so quite a bullish development here. As I said, the IWM is the only one that is underperforming. Now, European indices are also somewhat underperforming. We had shown this break lower from this ascending channel for the DAX, and so far it hasn't recovered. It doesn't mean that they don't remain bullish, both the DAX and the FTSE, but definitely we see some loss of momentum and some clear underperformance in comparison to what the US stock indices are doing. And coach, if you're here, I have your favorite. Are you here? And that's the one. This is the gold-silver ratio on a 4-hour chart. So I was paying close attention to it lately on a lower time frame. We had this ascending channel. We then went to a steeper one. We then started seeing clear RSI divergence. We then developed an ascending wedge within the ascending channel. We've now broken today, actually, we broke below this ascending wedge, but still within the boundaries of this ascending channel. And I'm pretty sure, from a personal perspective, that if we crack through 92, which is, this area of support, we're probably going to see silver overperforming gold for a period of time, at least from a technical perspective. That's how it looks. And Blake mentioned it a while ago. Usually a period of overperformance of silver over gold points to overperformance, to a good performance from the metal complex. Okay, and that's something to keep in mind. Crude Gregor targeting 64 in his active pattern in play today. Yeah, I mean, if you combine what I was just saying with having to do with gold, silver, Aussie, Kiwi, let me add to this that I totally agree with Blake. If you remember last week, I mentioned that both the Aussie yen, that's actually what we drew a long time ago in the Aussie yen, both the Aussie yen and the Kiwi yen seem to be continuing higher. I mean, Kiwi yen formed here a textbook pennant. It's already, moving higher. I expect a continuation. Aussie Kiwi, you can see here in blue, another pennant. We're breaking higher. So if you look at all those, you would expect that probably as they are doing well, probably crude is going to continue doing well, or at least it's not going to collapse lower. Okay, so I know that we've spent now 3 days exactly on the 61.8% fib, but it's one thing stalling at a key resistance, but it's another thing seeing that despite the fact that you have stalled, there is absolutely no reversal. So usually that is a sign, that is a signal that you should see continuation higher. So that proves that, yes, this was an important resistance for the market, but if it's not potent enough to turn it lower, then eventually we're going to continue higher. In which case, I don't know about 64, but I'm going to tell you my personal point of view. I see a nice confluence of resistances roughly at 63 to 63.50. Okay, So not that different, but I would be looking towards the 63, 63.50 area for a reversal after we see another move higher. So that's my main case scenario having to do with crude. So I agree with Gregor. Looks very likely that we're going to continue higher. I would be a little bit more conservative having to do with my target, but I'm pretty sure that he has his reasons for aiming for 64. Anyhow, there's not much to consider here. I mean, even if we go to 63, some very basic money management would indicate that somebody that would have already bought would by then have at the very least de-risked that trade being in the money, I mean, by like $2.50 and most likely taking some profits as well. So let's make it to 63 and it's okay if we don't make it to 64. Now, a few more USD NOK helped also by crude's overperformance, got rejected from this ascending channel. Keep in mind that this ascending channel has been forming since 2018, the beginning of 2018. So the markets, the technical event that the market broke below it, and then we came back last week and we retested it as a resistance and it held, should be considered as an important indication that you shouldn't be trying your luck to the upside, not yet at least. It looks likely to me that, and that's more likely to happen, of course, if we have a move towards 63, 64 in crude, that we might end up retesting this key 840 area in USD NOK before we can take some longer term decisions. Okay, USD SEK, by the way, the other Scandinavian we're looking for, keep in mind, got rejected from confluence of 4 different resistances here, and that keeps it under pressure because in essence we posted another lower low. Also a possibility here that we're going to see continuation lower towards 910. USD CAD, one more to watch. We seem to be breaking below this recent range, recent consolidation range, and the 38.2. And most importantly, we're now just like 20, 30 pips above this double confluence of supports. You can see here how important it is, this ascending channel and this horizontal support area at 130. It's going to be quite a bearish development if we actually break below there. I wouldn't want to be in, long if we actually close below 130. I think it's going to be quite a dangerous proposition. Another one here having to do with the CAD yen. If you remember, I had marked this inverted head and shoulders formation before we broke higher. We have stalled at the 61.8, but the fact that we have consolidated for 6 days, including today, without being able to actually move, much lower from there, tells me that we're not done appreciating here. And it also makes sense because we haven't tagged the target of the inverted head and shoulders formation. That actually confluences with the 78.6 of the last move lower, both of which can be found roughly at 84.15. So I think that another push higher towards 84.15 from a technical perspective looks very likely to happen sooner rather than later. Give me advice on Nifty 50. Okay, that rhymes actually. Give me advice on Nifty 50. Okay. Here's the Nifty. Okay, the Nifty remains within an ascending channel, so that is definitely, bullish. I mean, we haven't damaged this uptrend in any way. But this pullback was to be expected because we got rejected from that ascending channel's resistance, while at the same time we were clearly developing divergence on the daily RSI. Now, I guess you can attempt to buy it. The closer to this channel support, the better. But keep in mind that if we actually break below this channel, I think there's going to be, more downside first. And, likely levels to watch for support after that is 10,850, 10,600, and you name it after that. So bottom line, it remains bullish, but I wouldn't want to be long if we break below 11,400. Okay, I would be looking for more weakness before more strength, if that happens, if that's the case. Let me check more questions. We covered that. Full moon tomorrow, says Tom. Depending on where you look, the numbers from China were a beat or hit consensus. That is what I'm seeing in Forex Live, at least. Yes. Thanks, Blake. Monthly chart, looking for a place to get short GU. Not really. I wouldn't be looking for a place to be short. To be honest, I'm staying away from pound, from the pound complex in general. The only pairs that I would feel more comfortable being involved with having to do with the pound is pound Aussie and pound Kiwi. And yes, euro pound as well, because we still have here the possibility of a nice ascending wedge confluencing with a long-term descending channel resistance. So I think that euro pound is also worth likely a shot to the downside, if anything, just from a risk reward perspective, because you can try it by having a very, very tight stop loss and a potential good reward.
Where would the stop be?
Depends on where you want the target to be. It depends, in essence, in how you want to approach your target. So if you want to be conservative with your target, a conservative target, in my opinion, would be a move down to 88.50. Okay, if that's the case, I think you can even risk having your stop loss at these previous highs there, because you're going to have a 1-to-1 risk reward ratio.
Okay, you mean 90-10, the high we had last week?
91.
Oh, I see. Okay.
Yeah, because there is also the possibility that we're going to see a little overthrow here.
Yeah.
Retest this previous high and then get rejected lower. There's also that possibility.
Thank you, buddy.
My pleasure, coach. By the way, you weren't here before you lost it. I was showing. It seems that we're having a nice development on the 4-hour chart in the gold-silver ratio.
Yeah, it's like a distribution top, or else it's setting up for. Let's see what you got.
Go see the recording. I'm kidding.
Oh, okay. Oh, sure.
I'm going to show you. Here it is. Breaking below,
it broke down. Yeah.
Breaking below an ascending wedge, but still within the confines of an ascending channel. But I think that a break below 92 is probably going to indicate further overperformance of silver over
I think
gold.
you're right. On this next wave here, silver is going to outperform. So say
you can also see here clear RSI divergence as well on the 4-hour chart. As you said, this looks, like distribution here.
Yeah.
So yeah, it looks likely. It looks likely.
Thank you.
My pleasure. Let me see. DAX looks bullish.
Buy silver while it's cheap. I'm kidding.
Or
I'm still long.
You just exchange. What you do in this, if you own physical, is you exchange your gold bullion for silver.
Yeah, you could do that. That's for sure.
Yeah,
I have a bit of both, just to be safe.
Okay, I know what you have more of.
The
color of my hair.
I'm reading a comment, Stelio, that you can answer as well if you want. Angelo is asking, can you explain why the focus is on the US and the emphasis on weakening the dollar in isolation? It seems that the consensus is that it will work. In past sessions, I have heard the same comments about other governments doing the same thing whenever the USD gets too strong relative to their currency. Will they not react to any attempts of the US weakening their currency by doing the same. Finally, the market should determine the proper levels. Look at the Swissy. Thanks. Much appreciated. First of all, let me begin by answering the last part. The markets should determine the proper levels. Unfortunately, the global effort from the central banks during the past couple of decades, but it has become a lot more intense during the last decade, has literally taken away price discovery from the market. So unfortunately, I'm afraid to say that the markets that we have are not free in any case. I guess you agree, Stelio, right?
Of course, and especially the Swiss is probably one of the most manipulated currencies from the central banks. But yeah, I think the question is, you have the dollar weakening or strengthening, and then other countries say, oh, the dollar is weakening, so we have to adjust our exchange rate to make us more competitive. The thing is, the world needs a weaker dollar. We've talked about this before.
Especially emerging markets.
Especially emerging markets which have dollar-denominated debt. Yes.
Yeah, it's going to be a huge relief for them.
Yes. So there's going to be some Sorry, I was muted. I don't know how I muted myself. I don't know how muted. But I was going to say, yes, so the world needs a weaker dollar because of the debt that is denominated in dollars that many other countries have. So there's going to be a lot of toing and froing and tinkering with exchange rates, let's say. But unfortunately, they're not going to be, at the end of the day, they're not going to be left to the markets to determine.
And by the way, it seems to be also what the US wants for obvious reasons. And what is the obvious reason? The Fed has kept repeating again and again and again that they want to increase inflation. Now, if you ask me, it's absolutely crazy. I mean, it's exactly against what their mandate is. But what is the easiest way to increase inflation? By depreciating your currency, especially for a country like the US that has, such a huge trade imbalance, right? The vast majority of the things in the US are imported, which means that the depreciation of the currency will immediately make imported stuff more expensive, which means that will immediately move inflation higher. And obviously a depreciation of the dollar, since the US has all of its debt denominated in dollars, immediately means that it also provides a debt relief for the US. That is why basically both the US and emerging markets want the same thing, a weaker dollar. Now, of course, that's not what other developed countries want. So, for example, Europe wouldn't want that, or, the UK wouldn't want that, or, but US and emerging markets do like it. Now,
China wouldn't want that either.
Yeah,
they want to be able to export much easier, right? So.
That is very true. That is very true. China wouldn't want that either. Yeah, that is very true. Okay, Coach, do we have an interview today?
We do.
Who do we have?
We have Ronit.
Oh, great.
Yeah, Ronit has some very interesting technical work and ratio work. So I'm looking forward to talking to him.
By the way, the gentleman that we had last week was Kip Herriage.
Was what?
Kip Herriage, yes.
Oh yeah, Kip, yeah.
Yes.
Yeah, because I have to tell you, Coach, I was probably, I know that you thought that my comments were a little bit salty, but I saw a tweet from him, and I wanted to mention that yesterday, actually, the day before yesterday, so Saturday, that he expects Dow to be at 35,000 by the end of 2020 and above 50,000 by the end of 2024.
Yeah.
Which magically means that he expects that we have completely abolished business cycles. We're not going to have a recession ever again.
Yeah. I believe his major fundamental thrust for that is his belief in, he thinks nationalism is a good thing for the markets and our markets. And, and unwinding of the new world order?
What is the economic proof for that? Because
I don't know.
because you can make arguments about, there are always positives in, in any kind of a situation, but having to do especially with, if we go back to protectionism, which is likely because we seem to be in such a trend, as you understand, huge companies that have, in essence, propelled US stocks as high as they have are not going to find it that easy to do that well, right? It's not rocket science.
This is a very long discussion, actually, but yeah, it's.
I think that the only way we're going to hit his target, and I'm pretty sure that he won't want to hit it like that, is if we have hyperinflation. That's the only way I can see these kind of targets getting hit. And that's not a good way to hit those targets.
No, something like that would happen with QE infinity, really the Fed getting aggressive. My big picture is we top in here, and maybe we even pull back and take out the December low, and then the Fed really steps on the pedal, and then we get that blow off, and the dollar, when the dollar's good, very few things are. When the dollar's bad, everything gains in nominal terms. So, that's what I'm thinking. Maybe this fall, the Fed has to do a lot more than, a quarter here. And they'll be S&P sensitive more than data sensitive. I mean, they're talking about easing with the S&P at 3,000.
At all-time highs, yeah.
What are they going to say if that's right and we retest the December low?
Yeah, we're going through interesting times having to do with monetary policy. That's the only certainty.
Yeah.
And I also believe that we are in the dawn of this monetary system. I'm not saying that it's going to change next year, but I think it has run its course at a big extent, and I think that developments that we're going to get through the next few years, nobody can easily predict if it's going to be 1, 5, or 10, are going to force us to move to something else. When this experiment fails, we're going to be forced to move to something else.
Yeah, not looking forward to that failure.
Same here.
Okay, buddy. So in the meantime, let's succeed in the markets together, and let's look at some real interesting views from my trading warrior brother, Ronit. And Ronit, I just promoted you. You probably haven't had a promotion in a while, have you? So where are you? I just promoted you and I don't see you. Go back. I think he disappeared.
I don't see him. Oh yeah, there he is. Now I see him.
Is he in the panelists now?
Yeah, now he is.
Oh, okay.
I unmuted him as well.
Okay, hi Ronit.
Can you see?
Yeah, now it'll come up.
Yeah, it's loading, so we should.
So let's start with, what do you want to start with?
Well, with what you have up there, Ronit. Sorry, we lost
start with the US dollar.
Some of the audience during this, but go ahead and start with the dollar.
Okay. So I was actually showing you the dollar cycles, why it's actually at a very critical point. Can you see the screen? I don't know if it is loaded. Yeah. Can you see it?
Yeah, I see it. Okay,
so
we got it.
This is really a critical point where the dollar is, this is a cycle actually. So it's around 5.3 year cycle. And you can actually see here that after 1980 to 85, it went up. Same way, 1995 to 2000. And then around 2008, it had a short spike. And now, actually, it's around June, July, which is a very critical point. If it can actually take out that, probably it can go much higher, probably 1985 highs or much higher. Now, the technical thing is, how do you know it? So let's go into some basic charts of the US dollar.
Yeah, those are pretty wild targets. So you're thinking
I have a theory that I have a theory that anything which falls 80%, it can actually go up by inverse of 80%. So if the low was 70.8, so if all currencies are going to fall against the US dollar, so what's a 70.8 divided by 0.2, which is approximately 337. That's what I was showing you in the previous interview. What is the scale of dollar rally? But we have to take it one point at a time, and why and how it will actually happen. So
Okay.
so is chart coming up? The dollar. This is a very extreme short term, but a monthly chart. Can you see it?
We're looking at, yeah, the one with the oscillating magenta
Correct.
line. Yes.
So that's the one which is which tells you that it's holding up around that 96 to 199, 98.4 range. That's where it's not broken out or broken down. So it's indecisive.
Yes.
Now the problem here is that in my previous interview, when we actually discussed that after 103, it might test around 89, which is the lower point over here. We have to actually watch this July very critically, because it's exactly at a point of 28 years where there was a conflict, which was Kuwaitian embargo or oil crisis, which actually hit most countries. So I'll come up with that when
28 years ago?
Yeah, that's around 28 years ago. It was 1990 July.
Okay, that was the Iran-Iraq war.
Not Iran-Iraq. It was Kuwait.
I mean,
Iraq had attacked
it
Kuwait.
was Iraq into Kuwait. It was,
That's right.
Gulf War I.
Yeah. So there is a cycle which says that oil could actually oil went up something like 50% per month, something like that. So from $10 it spiked to around $30. We'll come up with that chart later. So for the dollar right now, what's the stats? So let's look at the euro, which is the highest weightage, which is around 57.6%. So it's actually this is the long-term chart. Can you see it over here? So it's actually
the dollar.
Now
Still have the dollar. You may have to unshare and then share again with a different chart, but we're stuck on the dollar.
Okay. Okay. So slightly different. Can you see the euro? No. New share. I gotta say new share, right?
Yeah, it's still the dollar.
Can you see it now?
Got it. Got it.
So the euro is actually the highest weightage. So wherever the euro goes, the dollar goes, technically.
Right. Right.
So now the thing is that 1.14, you see the trend is actually cracked up, but it's not broken down. So the 1985 to 2000 trend is actually just holding up, and most of the central banks are trying to hold this level. And this is where they decide that there is a cycle-wise, this is a very important point, if the euro goes up or breaks out or breaks down. Okay. So you got to watch something like 1.13 or 1.1. And what are the similarities between July 2008 and now is that the euro yen actually cracked in July 2008, and this could have a repeat of that. So I'll come up with the next chart. Now this is again the euro, right? New share, 1 minute. New share. So this will have the specific levels where it can crack and why, what level it can actually break down. So can you see it?
Yes.
So on the right hand side,
pointing towards that 85 cent level, 50%.
That's right. So I assume that the euro would actually go down something like 90% if the dollar has to rally. I'm assuming it for the timing. So if it's actually in the range that 1.05, 1.09, this at the minute actually something happens over here, 1.09, that's when everything just cracks up. So it'll go down to something like 1985 in a very short period of time, probably a couple of months or 3 months. And it's a repeat of what we can see in July 2008. It actually, when there was a oil spike and euro actually came down from 1.6 to 1.23 within something like 3 or 4 months.
I remember that.
We're looking at a similar event. So the pressure point is something like 1.09, where you can assume that there is something going wrong, and the dollar would be actually above 98.5 roughly. So that's the equal weightage.
Nice. Okay.
So let's go on to the next one. Now let's come to the second pair, which is the second highest weighted pair, which is the GBP USD. I'll share it again. One minute.
We have it. We have it.
This is again a short-term cycle. Can you see it?
Yeah, we have it. That's
so the GBP USD was around 2.6 in 1972, and there is a channel. This is actually a Ganfan. So you can see that the 1985 trend has already broken, and the trend which broke was the Brexit 2016. So it tried to retrace back, but there is a channel building over here. So this is where again the probably the British problems start again, but it could go sideways. We just have to assume that it doesn't go above that 1.27. But if it cracks 1.25 or 1.24, then we say that there is a problem, and it's the same confluence that the strengthening of the dollar. And I'll just go on to the next chart. So this is the most interesting pair where I'll show you a Swiss franc USD pair. Can you see it now?
Yes.
I shared it.
We're right there.
Okay. So this is a very critical thing that Swiss franc never actually went up. I mean, never underperformed against the USD from 1972. So the last time it did was somewhere around 1985, 2000, and then now. So it's almost a parity. So I did hear that Swiss central banks are actually buying up assets and etc. But what if this whole trend is about to reverse? And this is part of the dollar strengthening. So a parity would say that this is another confluence or another checkpoint where you can say that the overall trend, secular trend of the dollar against all currencies is going to go up. Okay, so let's move on to the next chart.
Against all currencies, it's going to go up against all currencies.
Yeah, it's going to go up. I mean, if Swiss franc is going to depreciate, dollar is going to go up. So that means that USD shift would be somewhere around above 1.2, which has never happened, as you can see. Okay, so let's pick some Asian currency, which is actually like a Korean won. They're also holding a trend over here. Can you see it over here?
Yes.
So they're also holding a trend, a breakout trend, which means that it's actually a secular trend where the theory is sound that the US dollar will actually move faster than what it did in 1980s. Whatever be the reason. The reason could be maybe because the Fed is not dropping the rates. And we'll come on that topic when we actually reach bonds. So let's move on to the next currency. 1 minute. So 1 minute. So 1 minute. Okay. So I've picked up another currency, which is USD Singapore dollar. So this is again showing you that secular trend that there is a problem. And can you see it?
Yes.
So it shows you that falling wedge where if there is a breakout, then Asia will also actually join the depreciation bandwagon. So their currencies also will depreciate quite drastically. So the trigger point could be this July. So let's move on to another currency.
I mean, all these charts were right there for whether the market's going to break out or fail. Right there on all of
like it's waiting for the right trigger where people will actually blame the news, but it's kind of anticipated. So every currency is actually placed, at a particular point where the chances of a breakout is higher. That means the breakdown of most currencies is higher
Okay.
than
Perhaps it
and
could be the Fed eases, but it's not enough, and then
what
they
if
have
the
to get
Fed raises?
they have to get
So
radical.
we'll come on to that actually when we see bonds where the whole retracement was around 61.8, and that's also a cycle where the bonds have actually come down, and they have made a low in June, July. So that's like a cycle point where there is a point where it could reverse. So we'll come on to that chart.
Okay.
So this is a very interesting thing where everybody says if the dollar actually rallies, the yen also will depreciate quite a bit. But what if it is not? So this is a long-term chart. Can you see it? USD yen.
Yeah.
This is what is actually signaling, and everybody knows that there is an inverse correlation between USD yen and gold. So, what if this USD yen actually breaks down something like to 90, or probably I marked that 90 over there, and the next level is around 65.
Okay. Okay. What if it breaks out to the upside?
So that means most of the yen pairs, what's common between 2008 and now is that most of the yen pairs, that is Euro yen, GBP yen, Aussie dollar yen, all were depreciating in the financial crisis.
Right.
And there could be a possibility that the yen, USD yen could hit somewhere around 45. So what will happen to the gold? So we'll come on to that.
Okay.
Maybe that's the reason gold is actually going to melt up, not melt down. Like most people think that it's a deflation edge. It has nothing to do with that, according to me, because in the olden days when people bought gold, they didn't look at inflation.
But if you're bullish a dollar, why can't the yen go up?
It could, but the statistical evidence shows that the yen could actually make a low, USD yen low, and then it could, maybe a central bank action could provide that currency to depreciate dramatically.
Okay.
But
I'm just on the other side for now. I think we're going to go, and I have been for weeks. So
if the USD yen is going to go up, that means it's going to go above 110. So
yeah,
that's the pivot where it actually, you have to change. As you say that if you don't change your mind, you have no change left.
Right.
So something like that.
It's a beautiful looking chart. All of yours are, Ronan. Thank you for this.
So these are the
going.
basic ones. We'll come on to the intermarket relations later. Okay. So let's move on to the next one. So this is a new share.
Yeah.
Okay.
Dollar
so
yuan.
USD yuan.
Yeah.
Now this is a very critical thing that from 1982 to 1994, yuan actually depreciated.
Yeah.
And after 1994 to 2005, just held in a flat line, and then it started appreciating against the US dollar till December 13, 2013. So that means this time when the yuan depreciates, the dollar will rise, which is what nobody wants.
Right.
So that's also holding at a critical point. This is again a CAN fan.
Yeah, this looks like it could break out to the upside. Would your yellow line be one of the targets, 780?
780. So it's right now 680. That's approximately what, 30% depreciation?
Yeah, that would really shake up the markets.
It'll shake up Asian markets for sure, because if China devalues, everybody follows. We have seen that in 1989, 88, 89, where everybody thought that Asian tigers were the big thing.
Yeah.
But if you really look at it, most of their currencies depreciated dramatically. Take a case of India. Indian currency was against the dollar around 13.5, around 1988, 89. It depreciated to something like 36 within 3 years' time. So that's 60% devaluation. Okay. So let's move on to the next one.
King dollar.
So if somebody wants a short-term dollar, now you want to see, let's move on to the short cycle of the dollar. So let me show you the screen. 1 minute. Okay. Just 1 minute.
Okay.
You can hear me, right?
Yes.
What are these charts? 1 minute. Just hold on. So made a lot of charts, but I'm not able to show it properly. 1 second.
Sure.
Okay, so phew, I've lost the screen. One
Go back
second.
to share. Click
Okay,
the green box. The green share box on the bottom of your screen.
Got it. So this is a very extreme short-term cycle where you can actually see those who actually look at the break point or the breakdown point or the breakout point. So you can see that 96.4 is the breakout point where you can say below that the dollar is very, very vulnerable for a big fall. Okay, but at the same time, if it tries to melt up above 98.4, then actually it'll start moving faster. And that's when you have to observe that what the gold does or oil does. So there is a possibility that gold and oil actually can go up rather than down. But technically, everybody observes that the dollar goes up, so the gold has to go down. So we'll actually come to that. Just a minute. So just move to another chart.
So how are you positioned right now? You flat waiting for these triggers?
The trigger is around 25th July, and we got to observe gold. If 1437 actually takes out, it's taken out, it would actually rush to 1740 or something like that. So we'll come up with commodities. I'll show you commodities, gold, silver charts. So let me open that up. Just 1 minute. So this is a share. 1 minute. So you can see. So I keep losing that screen. I'm really sorry.
So it's okay. So you go back to the bottom where it says share again. So, you know, if you stay on the same screen with your charts, you won't have to do this, but now you have to go back to share and reshare.
Okay, got it.
So this will be a rehearsal for your next interview.
Sure. So I think this is the first time we are using the Zoom.
Yeah.
So, okay, I think this will be fine. So if I open something, I can see it. Can you see?
Yeah.
Can you see this chart? No.
Oh, not yet.
Okay. Now.
Probably loading. Oh, okay. Now I see a page with different charts on it. Small.
Okay.
So you could probably just click those and show them to us.
Okay. So this is a very extreme short-term cycle for the gold. Okay. So gold is actually, this is in a daily time frame to know 1406 around, what is the level? Support is around 1392. And that's where you can assume that the trade is going wrong. So there are a couple of times where it tried to actually break that, but it didn't sustain above it. Okay. So the next time actually it breaks down, yes, there is a possibility that it can melt down due to whatever reason. But if it actually starts continuing that pattern, that means the next target will be somewhere around 1480, 1553, 1623. It'll just keep going. So that will be an extension wave where everybody will catch up and all these oil stocks will start performing. So I'll show you
you mean gold stocks?
Yeah, gold stocks. So gold and silver start outperforming at that moment. So can you see this over here? No. Can you see it? New one?
Yeah.
That's the monthly chart. So can you see it? 1480.
Yeah.
Okay. So that's where the monthly point where it broke down in 2012.
That's where
That
I'm looking
means
to short it. That's 61.8 back from the high of
exactly.
1900.
But if it actually takes out that, it will actually straight. That means if it is taking out 1440, that means Dow Gold ratio would actually would have broken down something like 17.5, which will come up. Will come onto that chart. That's a trend which actually continued from 2011, and it has been from a one-way street. So let's move on to the next chart. So this is an RSI where it shows that the next target is somewhere around 1600. So this is my primary signal, which I have actually quoted. So this chart is very critical to see what really happened and how much it can move to. Can you see the blue lines?
Yeah.
So the primary signal was around that aqua line, which is approximately 1337. And that is where you can actually see in the 1976 to 1980, when interest rates actually were rising, gold started outperforming. So we could actually get a similar move because of rise in interest rate and not fall in interest rates.
Interesting.
So 1337, if it actually reaches 2011 top, that means it has a target of 2520. So you can see it over there on the blue line. That's the blue line, right? Can you see a dotted blue line? And if it reaches something like 1980 stop, it's somewhere around 4235, 4230. So this is actually a real bull market. You can actually see gold, has broken out. Silver hasn't yet, but if it crosses around 16.5, then there'll be a secular move. So let's move on to the next one. So even the normal RSI is confirming this is for silver. So it's actually 9.810. So if it takes out 16, it's going to go to 23 in a rush.
Okay.
So let's move on to the next one. So this is a similar model chart where it says that silver still is not in a bull market. You can actually see when 1977, 1978, it started spiking. And even in 2002, it started, so this is actually a trending move. So if by chance, if 4,300 is the value of gold, what should be the value of silver? People will argue that 1:40. So that means you can actually see the red signal, red line, which is on the topmost part, which is around 108. So that comes to around.
Okay, so you would look for the gold silver ratio then to come in from the 90 range and silver begin to outperform? Hello? I think we lost Ronan.
Wow. Can you hear me?
Can hear you now, yeah.
Yeah.
All right, I
So-
tell you what, Ronan, why don't you show the bond chart and we'll wrap it with the bonds.
Okay, this is most important. I think you're discussing about gold and silver ratio, okay? So these are cycles which are from 1975, 1974. So you can see the red lines are always the reversal points.
We don't see anything you unshared.
Okay, okay. Oh my God. 1 minute. Share. Okay. Can you see it now?
Should be coming up, yeah. There you go.
So all the red lines are very critical points of reversals. This is a gold-silver ratio. So that means that these are cycles. You can actually divide the time. And you can see that 1980 was a reversal, 1990 was a reversal, then 1998, similar case in the financial crisis, 2008, and now. So July 2019, there is a point where silver will start outperforming. So we know that once 91.2 on the ratio breaks, that's when you have to actually, things will start accelerating. So I'll actually move on to the bond charts quickly. So just 1 minute. I should have organized myself well. So 1 minute. So bonds and There you go. So 1 minute. Okay, this is one chart I wanted to show that it's crude oil actually. So there is a possibility that crude oil could actually go up because of war or because of rise in interest rates. You can see the wedge; it's a falling wedge. That means that in the next few years it could be a very inflationary cycle. So the resistance is around 61 right now. Currently it's at 61, and if it breaks out, 78 is the last stop. After that, there is a possibility that it can move like what it did in 1990s, which is 100, 150, and then 216, which is a long-term top kind of thing. Okay, so let's go on to one last bonds, and then we can actually 1 minute.
Beautiful chart. You
Okay.
do some great work.
So this is the bond. I think I sent you this.
Yeah,
This is the yield chart. So this is at a critical point where it will decide what's the course next. Okay. So if 2.1 actually, which is the current level, it actually holds, there is a possibility that it can actually go back in a hurry to 7, 6, 7. But if it breaks down, then the scenario changes. We need to see what's going on. So the top is 15.84. The resistance you see 3.05. It actually broke down. Anybody could use this chart to actually interpret what's actually happening in bond yields and long-term bonds. So if bond yields, my guess is that the whole rise from 2016 to 3.15, this is 61.8 retracement. So 2.10 or 2.0. That means if this is actually an extension of wave 3, it could actually be an inflationary cycle and it could rise very dramatically. So can you see the next screen?
Waiting.
Just 1 minute. Okay.
Yeah, got it.
Okay, so you can actually see at the bottom, the levels are precise. So 2.23 means there is a possibility that this whole cycle, which started in 1982, could actually, accelerate on the upside rather than the downside. But majority think that the yields will go to 0 and US is going to be another Japan. Probably not. So this is one. And this was the chart with, I was showing you a possibility that 2.0, 2.1, this is a possible path. So if this is an inflationary cycle, that means oil and gold could go up and other currencies could collapse because there is a rush into the US dollar. So it's a very unique scenario where we have to see that what's happening with gold and what's happening with oil with respect to US dollar and yuan. Okay. So I can actually show you some intermarket relationships. Okay, this is USD bonds, treasury bonds. So if this is 1, so if inflation is going to rise, that means US bonds could actually break down, not break out. But this is a contrarian view. The channel was maintained from 1982. You can actually see, and it broke down. The critical point here is around 147. If it actually breaks down, that's the signal that treasuries are going to be dumped and US dollar could rise because other central banks could be actually selling their bonds in order to actually shore up their own currencies. So that's the reason that I think that most of the currencies would actually start collapsing faster than what people think. Okay, so I think we can actually, I would like to, probably I will post things on Twitter and actually people who are actually over here can actually ask questions and we can actually take it from there.
Okay, do you mainly just trade for yourself? Do you have a service or anything, or you just want Twitter followers?
No, I don't want Twitter followers, but it's something like I do follow international markets and I don't run a service, but if somebody asks, I do actually help them out. Okay. Because my technical analysis is totally different from what's there.
Then
so I look for cycles. I don't know, but I don't know anyone, but I try to, give a different view and to see what is exactly going on. And it's not based on certain indicators or something. It's purely based on cycles, which is there in our daily lives. All you have to do is actually look for the turn. So I don't run a service. If somebody asks me certain questions, I would be happy to help them.
What a great guy you are, and my trading warrior brother, and you have a unique telescopic view, Ronit. So really appreciate you coming on, and next time it'll probably run a little smoother for you with the technical parts of Zoom. But it was a great job, and we appreciate it. And it's going to be a great video for people to really take a look at some macro views and consider some of the events that some of your work is forecasting. So thank you so much for being with us today, buddy.
Thanks, Dale. Thanks, Dale. And everybody should watch out on 25th July or 27th July. That's when the real actually moves will start. If there
right
is
before
a
the
rise,
Fed.
yes. So because right now everybody argued that the Fed has to cut, so the market had to run up. So every market has been running up. So that's the reason gold also. There is a similarity between 2015 gold rise and now. So if gold is actually going to break out, that's the signal that there's something going wrong. And you have to watch exactly what is crude doing above 61, because that would be a trending move, which will be probably in a year or something like that. So it's a critical point to watch yen pairs too, and especially euro yen, which I couldn't show. A 120 breakdown would be something similar to a financial crisis in 2008. So I would actually wrap it up. If anybody wants to ask something, they can actually ping me on Twitter. I would be glad to help them.
Okay, and his Twitter handle is at RONIT 9Q, Ronit 9Q, top trader, Ronit 9Q. So that's a wrap, everyone. Remember, don't just count your pips, count your blessings. Thank you, Ronit.
Thanks, Dave.
Good hunting, and we'll see everyone for Turnaround Tuesday. Adios. Look for Ronit's video. You'll have to go over it again. I know I will. Adios.
Thanks. Thanks, Dave.
Bye-bye.
Bye.